This is something that we just cannot ignore. Welcome back to Empire Trading Academy, guys. Hit the like, hit the subscribe if you have not already. Let's get right into this. In today's video, guys, we're going to be going over just a comparison of the three accumulation structures that have formed at the bottom of our corrections. Okay, we're going to be looking at the one that formed from June or end of May to July, the one in September, end of September, and then the one that's forming right now. Okay, so at the end of these corrections that we've had, right? We've had some sort of accumulation or bullish reversal pattern that's formed. Okay, we had this falling wedge or Wyckoff accumulation pattern. We had this falling wedge or accumulation pattern breaking out to the upside, and again we have a falling wedge or a Wyckoff accumulation pattern again happening here. Okay, now what I want to focus on in this video is the structure that's forming in our after our breakout. Okay, so we'll go ahead and I'll show you briefly. Okay, each one of these, this is from July, this is from September, and this is now. Okay, recently we've come down just a little bit, but we're still making a higher low, which is important. All right. So we know in July, I mean, if we look at these very briefly, they're extremely similar patterns. Okay, they're extremely similar price action structure on the breakout. Okay, we have a breakout from each of those bullish structures, bullish reversal patterns. Okay, and then we're also, this is on the 30-minute here. It's also on the hourly. We also get a breakout above this 200 moving average on the 30-minute or the hourly. Okay, so these are looking very, very similar there. Okay, one thing I also want you to notice as well, if we go down to the 30-minute, okay, which is big. All right, start here. So on this breakout here, guys, we look down at the RSI. Okay, so in our price structure, we're getting higher highs and slightly higher lows, right? Okay, but if we look at our RSI, yes, we have bearish divergence or negative divergence on the top, but what's more important is that we're getting this hidden bullish divergence on the lows. Okay, so even though we're making higher lows, right? But we're making lower lows on the RSI, and this is not bearish. This is actually bullish, giving more of a we'll call it more of a runway for it to move when we move to the upside. Okay, and so you see here, that's exactly what happened. We had tons of room to run on this impulse move up. Okay, that was July. If we go ahead and we go over to our September, okay, same exact thing happened. Okay, so we have these higher highs and then slightly higher lows, but then again, what do we have? We have that same negative divergence on the top, but we have that slightly hidden bullish divergence here on the RSI, giving us more room to lead to this big impulse move up. And then finally, if we go to where we're at right now, this is our structure now. We zoom in, okay. So like I said, recently we did have this slight sell-off, which is more like what we saw in July, okay? But we're still maintaining a slightly higher low, which is good. But again, on the RSI, negative divergence on the top, okay, that's fine. But our lows, we're getting this big hidden bullish divergence, okay? And now look at all this room that we have to run from these lows, okay? Now, something that we do want to watch out for. We want to watch out for a breakdown of a lower low in price action. Okay, this would not be in the very short term. This is not what we would want to see, because we want to see some type of continuation in the bullish momentum. All right. One thing to point out is that if you remember all the way now, I don't believe that it could be, but I don't believe that this is it, because the structure is different, and our trading range is also very different than what we saw here in June and July. Okay, so we did have that false breakout to the upside out of this descending wedge. Okay, this falling wedge, right? So we had this. We also had this, we have the higher lows, right? The only thing is that we do start to get not very much a higher high, okay? And we do get the hidden bullish divergence as well, All right. But this was, we know during this time, guys, this was heavily manipulated during this time. And so there were all sorts of false breakouts everywhere. Still continues. But if we're looking at, zoom out really quickly, if we're looking at this distribution top here and this accumulation phase, it was extreme. Okay. So it's not my opinion that this is what we're seeing, but it's always possible. Okay. And so if we were to see that lower low, that's what we would want to just to look out for in the short term. Okay. Keep in mind that if we switch over to what we've been looking at as far as our accumulation pattern here, guys, is that there would really be no issue seeing a little bit of downside in this overall structure. Okay, because we would have that nice phase D of accumulation, this event. Okay, and overall, this would still continue to be bullish. All right, this double bottom, right, and then we just step our way with 5 waves up before we go ahead and we consolidate above the resistance that was established or right around it before we see our impulse move up. Okay, but those are the things that I'm looking at, we're looking at here at Empire Trading Academy, that you guys can be looking at as well. If you have any questions or anything, please let us know, email us, message us, guys, and we'll see you in the next video.